Well, good morning, everyone. It's pretty exciting to be on the last panel of what's been a really fantastic Boston Blockchain Week. I really want to start out commending Ian Kane, John O'Keefe, and the team at QUBIC Labs for really putting together a terrific set of panels. I know I've learned a lot, and I encourage you all to put this on your calendar for next year. Tell your friends, family, people involved in the ecosystem, because we really want to grow this into an iconic event. So in addition to being on the board of QUBIC Labs, I spend a lot of time as an angel investor. I'm a member of Launchpad Venture Group, and I have a number of investments in Web3. So this topic is really near and dear to my heart, because if those investments can't raise follow-on rounds of venture capital to support their growth, they're not going to be successful. And we're really fortunate to have this panel of experts in the VC community to give us insight into the current state of Web3 venture capital. So I'll start with self-introductions. David?
Great. Yeah, my name is David Hsu. I'm an investor at Breed. I got my start doing some crypto research at Weddleton. Actually, Matt here and Nick were really instrumental in kind of getting me started on that path. And then after that, I did some work for a fund of funds out in the West Coast, investing in other crypto funds before joining Breed, where we invest in pre-seed and seed, really helping entrepreneurs at the earliest stage.
Awesome. I'm Matt Walsh. I grew up around here, went to BC High. Shout out to these guys over here. We started Castle Island back in 2018. Originally was at Fidelity before that, working on crypto and blockchain initiatives, started a fund over at Fidelity. We're a $250 million fund that invests in pre-seed, seed, and Series A blockchain infrastructure companies.
Keli Callaghan, I'm a partner at Arrington Capital. Prior to Arrington, I got into cryptos going back 6 years ago. I was one of the first employees at Algorand, Silvio Macaulay's blockchain here out of MIT in Boston. Was the CMO there, where I headed up all their growth, comms, marketing, BD, all that stuff. Joined Arrington Capital about a year and a half ago. We're a dual strategy, close to $500 million at this point, liquid trading, as well as about 200 portfolio companies over the past 5 years across Web3.
Patrick O'Kane, I'm a partner at RW3 Ventures. We are a blockchain-based investment fund. We launched in October of 2021. We invest across the ecosystem, infrastructure, financial services, DeFi, consumer-facing companies, and really everything in between. Prior to launching this fund, I worked in various capacities with the government, spent a lot of time with the intelligence community, spent a lot of time with the Department of Justice, and that's really where I got my start in crypto. In 2012, I started to build out the DOJ's crypto investigative campaigns and strategies.
So great. Well, thank you. All right, to set the context for our discussion this morning, I'm going to refer to the key takeaways from a recent PitchBook Emerging Indicator Report on Web3. So the report states that Q2 2023 top VC investment in emerging markets only slowed slightly from the Q4 2022 peak. However, it includes a key takeaway that AI and ML dominates, Web3 collapses. It notes that Web3 and DeFi investments notably waned, reflecting challenges from the regulatory scrutiny, limited practical use cases, and rising interest rates. So it's a little bit of gloom and doom. So in this context, what's your view of the state of VC and Web3 right now? We can start with you, Patrick.
Sure.
Sir.
I mean, it's very clear that funding for venture firms has decreased substantially, and that means that venture funding into the ecosystem has dried up substantially. So that's turned it into essentially from a founder's market to an investor's market now. While we don't think about cycles and whether that we're in the bottom of a cycle or the top of the cycle, a lot has been written about that. You can read it. We don't really look at that. We fundamentally believe in the tech and try to find opportunities that are disruptive, using blockchain technology, and have the ability to scale regardless of whether we're in a cycle or the regulatory environment. But it is clear that the funding situation is quite challenging right now.
I think, It's interesting. It's definitely an investor's market, but I got to give hats off to the founders that are still dedicated and building in this space. I think they are inspirational. I think they are so focused and dedicated on what is possible with this space that they're doing amazing work. They see the value, even though the valuations are lower. They see where things are going to happen. And the energy really is still positive if you look within the industry and the growth. Being in Singapore last week with thousands of people in town just for crypto, I think AI and ML are sort of shiny objects right now. I also think if you look at that, there'll be a couple of winners, but if you look at blockchain's going to infiltrate a number of different industries in kind of a different way, and there's a lot more opportunities for building those component pieces.
One of the things that's most exciting probably about investing in the blockchain space is just that you're talking to entrepreneurs all day that are trying to disrupt some of the largest markets on earth, right? I mean, if you look at the total market size of money, or you look at the total market size of operating systems on the internet, so you're really talking about just TAMs that are enormous. So despite the interest rate environment and the funding cycle we're in right now, I think one of the most optimistic things you see is just the ambition of these founders that, you're trying to disrupt gold, you're trying to disrupt fiat currencies, you're trying to disrupt the way the internet itself is actually built. And so I think despite the cycle, the optimism at the entrepreneurial level really continues, which is really what drives the innovation.
Yeah, and I think the last thing that I'll just add is this cycle is so much different from previous cycles where there wasn't a lot of tech that was actually usable. It's mostly just white papers, and I think now there's actually applications that you see like hundreds of thousands to millions of people actually using. Stable coins, payments have really taken off in like Latin America and emerging countries, and I think that's just going to grow going forward.
Well, that's great. That's very encouraging to hear. So, all right. I'd like to get some insight into what are the most exciting projects that you see, and maybe provide a little bit of insight into how you screen projects and determine what's investable. I'm going to start with you, David.
Yeah, sure. So we focus more on the earlier stage things. So a lot of times it's kind of a team pre-product, just coming with an idea. So we focus a lot on team. Things that we look for is what have they done in the past? Do they have kind of a track record of success? Are they really good leaders? Are they able to kind of bring other high caliber people onto their teams? That's most important. Just we think that sometimes it's so early in the stage that people can pivot and things change, and blockchain also, the tech moves so quickly that you can have a good idea and it can be disrupted by some other upgrade or update that comes into the space. So that's what we look for the most. And then in terms of like stuff that we're looking at recently that we're really interested in, we've been focused a lot on consumer. We think that infra has, for the most part, maybe there's too much infra right now and not a lot of actual use cases for like people using these applications. So we're really trying to find like apps that people are using on a day-to-day basis. I think when we look in Latin America, emerging markets, we see a lot of people that are actually using this stuff like on a day-to-day basis for payments because like either their currencies are under hyperinflation or it's a good store of value for them. And so those are areas that we're really interested in. And then another area is gaming. Kind of maybe like a little bit ironic, but we think that naturally like the gamers have already they're already used to kind of digital assets in some way, shape, or form. So getting to kind of like pivot to digital assets where they actually own is a little bit easier.
Great.
One of my mental models for all of this in the digital asset space has always been if you just divorce protocols, if you just assume that blockchain-based assets will be a thing, there are certain categories that just have to exist that aren't there yet. And so whether you have a digital dollar represented on chain, whether you have an ETH, whether you have a Bitcoin, whether eventually you have a stock certificate that's represented on a blockchain, how do you hold that? How do you move it around? How do you protect it? So in a lot of ways, similar to the early days of the internet, where, okay, you could see that the internet was going to be a thing, but we need to build browsers. We need to build cybersecurity companies to protect things that you're putting on the internet. We need to build all these ancillary components. So I think the equivalent of that in the blockchain space is compliance software, it's trading technology, it's key management, custody workflow. So there's just a lot of this stuff. And so it sort of reminds me in the early days when we started looking at Bitcoin at Fidelity in 2014, you couldn't even figure out what the price of Bitcoin was because you had all these various exchanges. You need to build basic things like reference rate providers and things like that, compliance systems. So there's a lot of that is still low-hanging fruit in the blockchain space now, and I'd say that's where we tend to focus.
Yeah, it's not that it's still early, it's that it's so complicated, right? And there's so much that needs to be done still. So same thing with us, we're very early stage. We like to do pre-seed, seed, sometimes we'll do A, we do a lot of follow-on. A lot of infrastructure, a lot of institutional training components, more sophisticated financial products. We've been around for long enough where you started investing in these layer ones and it's sort of evolved now to like not just the apps and not just apps that are powering those marketplaces across a variety of industries, but also the infrastructure that allows developers to build those, right? Where there's a monetization model that's a clear path to letting those things be built, monetized, and help grow additional apps off of it.
Yeah, I think our thesis is very similar to what Matt just articulated. We try to find opportunities that are filling real present gaps in the market. But I'd also like to tack on, and I said this in my previous panel, tools that allow governments to get proper insight to the ecosystem. And until the governments get comfortable with it, I don't think we're going to have favorable regulation. And then real world use cases. And companies that are building things that are disrupting massive industries with massive TAMs. I mentioned this again, healthcare, insurance is another one. So those sorts of plays are what get us really excited. Then how do we evaluate the deals? I think just a really robust due diligence process. We definitely look at the founders to make sure that they have they have a deep experience in the industry that they're building in. We look at the TAM. We look at revenue models. They really matter, and we really scrutinize the revenue projections that founders have. My team is comprised of a lot of operators that have been at the highest levels of some of the biggest companies in the space. So we really know what it takes to scale a blockchain-based business. And sometimes we see revenue projections that are somewhat fantasy. So we focus a lot on revenue. And increasingly now in this environment, we do focus on the cap table composition, both in previous funding rounds and the current rounds. We don't know what the macroeconomic environment is going to be like in a year from now, 2 years from now. So I want to invest with a solid set of partners that will come to bat for these companies if times get tough when they need to raise their next round or will provide real material value to help these companies scale.
That's a good point. I'd also add, you're seeing now a lot of like second-time founders in this space particularly, someone that had a really big win already because we've been around for a while, and now they're doing their second thing, and those are pretty fun too because they've proven, they know the space, they see where there's gaps to fill. I think those will get interesting over the next year or two as well.
That's great to hear. So one of the things I'm curious about is whether you have a sense that there's a higher failure rate in Web3 startups and startups in general. And what types of recommendations would you have for entrepreneurs that are starting companies in the space? So start with
kick it off.
Yeah.
I think there's a high failure rate with venture companies, early stage startups across the board. Whether it's higher in Web3, I think it's too soon to tell. I do think that over the past couple years, there were funds and firms that felt that they were underexposed to this industry. So there was an infusion of capital into potentially some unrealistic business models. And as those companies, their runway runs out, and if we're still in a sort of dry funding environment, we might see some of those companies washing out at a higher rate compared to the broader VC ecosystem. And then, for recommendations for companies, I think in this regulatory environment, incumbents seem to win out. Bill Gurley actually did a big talk on this for the All In Summit. Everyone should watch that. Really good talk. But companies might want to start thinking about a little more critically about the exit. Are these companies going to go public? I mean, for token deals, there's going to be a public listing of the token, and that's fine. But if it's an operating company that people invested for equity, I think the founders need to think more critically about their exit, and if aspects of their business or their entire business will be desirable to be purchased or acquired by one of the bigger incumbents, whether that's like a crypto native incumbent like Coinbase or a traditional financial institution that's starting to play a more meaningful role in this ecosystem.
Yeah, I would agree with that. Maybe to build on it, I think one of the critical failures of a lot of companies in the crypto space has been issuing a token too early that did not have actual utility. And in a lot of cases, issuing a token that was an unregistered security, and now they're dealing with the fallout from the SEC. And so I'd say the number one thing from the 2017, 2018 cycle that would have kneecapped a company would be to just issue that too early. And so that has fed more failures probably in the Web3 space than the broader venture ecosystem.
I do think they're resilient though. Like I'd have to say Web3 founders are pretty resilient. I think, I've got teams, it's a young man's game for sure, a young woman's game. But, we've got teams that are relocating to different geos because it's less expensive living costs and they can extend their runway longer and it's safer for them to be there for regulatory purposes. So, I think there is a lot of resilience in Web3, and for those that have been around for a couple of years, they've seen a couple of cycles, and so, there's an understanding that things will eventually turn. They're out going to these things where they're meeting new people, new founders coming into the space that are coming from traditional worlds, and you see more and more of that. So I think, I think there's probably a high level of failure across venture in general, maybe a little bit higher on Web3, but I'd challenge that a little bit.
It's great to see such a champion for entrepreneurs there in the panel. So, David?
I was just going to add, I do think that building in Web3 is a lot harder than building in traditional, a traditional startup, just because, one, you have kind of the regulation risk of, if you launch a token, there's all sorts of scrutiny there. But then on top of that, you have to worry about things like security, making sure that, your customers' funds aren't going to get hacked. There's state actors out there that are actively trying to attack a lot of these blockchains. And so that's kind of another element. And it's just you might be really good at product, you might be really good at building a consumer application, but then, you have to have a cryptographer on your team to figure out the cryptography, you have to have a security expert. And these are just added costs. You also have to it costs a lot of money if you're building a live protocol to get your protocol audited. Those can also run kind of hundreds of thousands. There's just kind of extra steps that you don't need to go through if you're building a traditional Web 2 company. So I think the biggest advice that I can give to entrepreneurs is trying to build something in Web 3 is I think you have to be really devoted to the crypto ethos. You really want to build something that's decentralized, going to change the world. It's going to be tough. And then once you're on board, that's great. I feel like we've seen a lot of entrepreneurs, I think, that maybe aren't really committed or don't understand how difficult it is to actually build something in the space and don't understand those other challenges. And they just think that it's kind of a traditional Web 2 company, and then you build something, it's not secure, and your funds get hacked, and then it just feels like you take a big L. So that's sort of my advice.
Okay, great. Well, thank you. So there's been a lot of discussion about regulation during this conference, so let's touch on that here. What are your thoughts on how regulation will impact crypto and Web3 in general? So
you've had 2 panels on regulation so far this morning, right? Yeah. It's funny, Singapore, was anybody else in Singapore?
Yeah.
Okay. Nobody there, you meet with nobody's looking over their shoulder saying, oh yeah, we got to talk about the regulatory thing. Nobody's saying, oh yeah, I got to raise a bunch of money and 7 figures of it is going to go to legal in my first 6 months. Nobody's doing any of that. It was so awesome. They're just I'm building this product, this is what it's going to do. I'm going to do a test net in 3 months, and then we're going to go mainnet, and then we get this whole plan. It's amazing. Let's
just
do
damn
it.
the torpedoes.
It was great. It was great.
I'll be a little bit tactical. I don't know if you want to.
Nope, go ahead.
I mean, we live in Stephen Lynch's district here. There's no person in the House of Representatives who has been more hostile to this innovation than Stephen Lynch. Stephen Lynch proposed a bill that was the Stablecoins Are Security bill, which would make every single US dollar stablecoin that is issued on a blockchain a security, which is insane. He's also proposed legislation that would make it such that only federally chartered banks can issue these things, which goes counter to everything that happens in financial services where New York trust charters are a thing, where companies like Bank of New York Mellon and Fidelity can operate under these frameworks. And so ultimately, as actors in this space, we need to take it upon ourselves to get rid of the politicians that are standing in the way. If Stephen Lynch was around at the beginning of the internet, he would have said that only Bell Atlantic and NYNEX can operate internet companies. I mean, this guy's a total joke. So we really, I think, need to take it upon ourselves as an industry to really elect officials that are going to be pro-innovation. So that's my take.
Yeah, tell us how you really feel.
Yeah.
So I think it's great also from the prior panel, we know how to contact our legislatures to put some pressure on them, and really I think that's probably an important part of it.
Yeah,
so.
she was here talking about standwithcrypto.org, I think, right?
Yeah. So David?
I think anecdotally, we've also heard a lot of just like U.S. entrepreneurs thinking about launching projects overseas. And so I think like if you see more of a clampdown of regulation happening where like people can't do what they want to do in crypto, you're going to see a lot of talent leave this area and go to other areas. I think that's just a net loss for the U.S.
Yeah, you're already seeing that, and it is a loss for sure.
So yeah, I mean, TBD on regulation. I fundamentally believe that there needs to be strict and clear regulation, because I think that there needs to be a level playing field for everyone from an informational standpoint. So regulation, that term has gotten, it's like a dirty word, but I don't think it should be. I am hopeful that we'll have some meaningful clarity soon, and I keep track of a lot of the bills being presented, and there's a lot of crypto and blockchain related bills out there floating around. There's bipartisan bills. I think something's going to come down the pipeline in the intermediate future here, so I'm hopeful. I don't think a good solution is to pack up your company and go overseas just because the environment might not be that favorable. I don't like that approach. I mean, I want America to thrive. I want the U.S. to still be that beacon, and it's provided a lot of these companies the opportunity to even get started. So I don't think that's the solution. I do think the solution is playing a more active role in reaching out to your congresspeople, getting involved with trade associations. I think that's very important, like the Blockchain Association, Coin Center. They do really great work, and I think that's very important, and I think more people should get involved with that.
That's great. I hope people leave inspired to do that. And I'd certainly like to see the regulation that enables innovation rather than constrains the innovation. So anything else to add on that area?
I think just because we're here in Boston, I just echoing what everyone's already said, but I think it's a shame with all the universities. It's amazing to see all of you here.
Yeah.
With all the universities that we have in the city of Boston and all of the potential and all of the stuff that's already and to come out of places like MIT, it's just a shame that like Massachusetts and Boston, being a Boston girl myself, like we're just not more out there and more in front of it here. Like I'm spending 2 weeks a month in Miami. That's insane.
Yeah, and maybe just you can get me going on the regulation. I'll go forever, but this shouldn't sound theoretical. I mean, there's two things that really should be passed out of the House of Representatives this cycle. Probably won't. Number one is a stablecoin bill. And so there should be clear rules of the road on how a financial services firm or a fintech should be able to issue a stablecoin. Right now, if you look at public blockchains, 75% of every transaction is a US dollar moving on chain. From a geopolitical perspective, having the dollar be strong internationally is in the best interest of the US. Two is a market structure bill. And so this FIT Act that's working its way through the House right now would give clear rules of the road on how broker-dealers, banks, and asset managers can safely engage in the crypto ecosystem. If those two bills were to pass, it would be the equivalent of the Telecommunications Act of 1996, which really opened up the internet. And so that's what we're asking for as an industry. And again, back to my point on the politicians, we should be electing politicians that want the US to be a dominant place to build a great startup, and for companies like Fidelity and Bank New York Mellon who want to be in this space, to give them regulatory clarity so that they're not employing an army of lawyers just to get off the ground with their product.
Well, great. Well, thank you. Well, in addition to the lack of regulatory clarity, what other constraints do you see in terms of being able to have Web3 projects grow and be successful, such as lack of sufficient workforce? You want to start with that, David?
Yeah, I mean, I think one of the big problems is just like a public perception. I do feel that sometimes Web3 has a bad public perception given the hacks and given the insecurity, and a lot of people think that, there's a lot of like pump and dump mentality. People just feel like it's the price action that's dedicating a lot of stuff, and they don't really take a peek at what's going underneath. And so I feel like there's just a big sort of like brand problem with crypto. And I also think that crypto folks don't really do a good job of kind of like, putting a good image out there. It's very kind of like antagonistic sometimes. And so I don't really know like what the solution is to solve that, but I think if we just have a better image of like, here's some real useful tech that can actually help a lot of people, and it is, and kind of showcasing it that way, you can really get a lot more people on board and supporting the movement.
Great.
One of the things I think about a lot is just product management and user experience. And so a lot of these projects are engineering led, and there's maybe a lack of empathy for users that are not deeply technical. And so if you think about that in the context of the internet, it would be like command line interfaces versus web browsers. So I think there's a big opportunity for non-crypto people to come into crypto with a product sense and just make things a lot easier to use for people that don't want to engage directly on blockchains.
Yeah, I was going to say the same thing. It's still clunky. There's still too many missing pieces that smooth it out, and those will come. But crypto, blockchain, we haven't had our social media moment yet. We haven't really had our gaming moment yet. If you think about it, there's like a lot of things that the insurance moment, the state, like there's a bunch of stuff, right? That crypto hasn't really been able to come because those apps don't exist that are super user friendly and everyone can get, like mass majority can get value out of. But I think that'll come.
Yeah, that makes sense. I agree with all that. I think maybe speaking from less of a retail-focused project to a more institutional-facing project, I see a lot of teams focusing so much on the tech aspect and not paying enough attention to the business development aspect. Scaling these businesses, and if your business is geared towards institutions, scaling and getting sales is really, really challenging. And you have to have an equal focus on your business development strategy as you do with making sure the tech is airtight.
Okay, that's great insight. I think we have time for one question from someone who speaks very quickly. So Aiden?
I'm honored to be the representative. Thank you. Patrick, you said something earlier about founders being ready to IPO, basically. And it struck me as that we're right now in a situation where the SEC has pretty much a full ground stop on passing filings. I think we saw that with the Circle de-SPAC deal. I mean, now that the IPO window is apparently opened up effective this week, how does that formulate to the panel's view about how you ultimately are going to get an exit and liquidity to pay your LPs?
I mean, that it varies by the type of company that you're talking about. There's some the less kind of pure protocol projects. So think about Chainalysis, for example. I think a company like that would have a real path towards an IPO. I think that would be the SEC would be friendly towards a company like that. But I think realistically, a lot of these companies won't IPO, and they will be incorporated into incumbents' tech stack. Whether it's PayPal, Coinbase. So I think that's a more realistic outcome for a lot of the stuff that we look at. And then on the token level, there's always the token launch, and that's essentially the IPO for a token project. But not sure if I answered your question there, but I think acquisitions is probably a likely outcome for a lot of these projects.